I'm pretty bullish for next week. I don't want to get your hopes up. I've been wrong plenty of times before, but I do like the setup. And if the markets and high growth or the genetics and genomics sector do us any favors, any of them, news, any sort of PR, right? I think we could benefit very massively because I do fundamentally like the setup here in the charts. Now, you may be looking at this and be wondering, Brandon, why do you have a price target set to the upside on a descending triangle? And you would be right because, you know, descending triangles are typically bearish. They are a bearish chart pattern. Descending level resistance, you're making lower highs and you're making the same level roughly of lows. That is true. Now, I like the setup here for many reasons, but this setup right here is very interesting because we got to close in the after hours on the 4-hourly chart here right at that level of descending resistance. And I want to tell everybody that if we open up, you know, if we open up tomorrow or Monday above 750 even, or yeah, above 752, really, it's going to be a break above this descending level of resistance. And I'm pretty confident in saying that that's pretty bullish because you have 3, almost 4, 5, 6. You have 6-ish perfect validations on this descending level. So I really do like our chances of actually getting a lot of bullish price action if we were to confirm the breakout above this descending level of resistance. And we've been forming this since the top, right? 920 was our peak. And since that, we've just been consolidating, right? We've been going sideways. Well, technically, we've been making lower highs and the same amount of lows, kind of lower lows, not really. Okay, macroscopically, no. But you get what I mean, right? If we were to break out above this, okay, that's why you want on your watch list. Play the breakout, right? Play it to 920 or at least $8 or 9 flat, right? I mean, I think we can go much higher than that, but yeah, you know, at least this is a potential breakout play if, you know, if we don't gap down, if the markets don't gap down tomorrow. But I want to look at the Bollinger Bands on the 4-hourly, right? This has been a cause for concern, and I called this out a while ago, right? Breaking down below the 21 SMA on the 4-hourly chart. So we broke down below it, and there's nothing else to say, right? It's bearish, right? You may be like, Brandon, what else? What the hell? What else can we talk about here? Well, I want to look at earlier in the past, right? If we go back right here, okay, this is a great example. We had our descending resistance level, a descending triangle here example as well. But if we look at the the Bollinger Band on the 4-hourly, right, 21 SMA in the middle Bollinger Band, the same thing. If you didn't know, you broke down, and that's a sell signal, right? You got set what 1, 2, 3, 4, 5 4-hourly candle closes below the 21 SMA. That's a sell signal. That's a confirmed breakdown, right? But it's only on one chart, one time frame. This is why we use multiple time frames to try to lower those false breakdowns and false signals that you get from the indicators in the bull or bear market gauging, right? Right after you broke down and got your sell signal for sure, right, about to test the resistance and get rejected, you broke out to new all-time highs, or to new all-time highs. So you have to be careful with this, right? And and that brings me to say, okay, and my point of that is that, hey, right, that scenario right there, we are currently in. Now, that's only one data point, right, in the past, but right now we are in the phase that we've got, like, you know, a couple, you know, last time we had 5 closes below, 4-hourly candle closes. This time we've got, like, you know, closer to 10. But, you know, if you look at the past, it's not that hard to find more examples, okay? Here's another example right here. Kind of. It's not the best example, but right here, right, this is in the handle, right? If we take this out, you can see a little more clearly, right? This was in the handle of this miniature cup and handle, right? This price target that we set right here that one did get hit very nicely, right? But if you look at the Bollinger Bands, you break below, and you have, on this one, you have like more than 10 4-hourly closes below, and you break out above to the upside still. So it just goes to show you the 4-hourly is maybe not the best gauge for an uptrend. However, the 21 SMA on the daily is an extremely strong level of and metric and gauger of direction and sentiment, right? Bullish or bearish territory. We are above it by a mile, right? Not a mile. Okay, it's at 634 price close of like what 753 and 760 something in the after hours, right? We're way above it and we're in bullish territory. And I also want to talk about the fact that this is going to be a great retracement and support and demand level for Bionano if we were to see any corners next week due to the Federal Reserve announcement and JP, the legend himself, JP, talking next week. So this is going to be, if you can catch this, if this thing comes and intersects with the ascending level of support, and if we look at the 4-hourly, it's very validated, right? And the daily doesn't look as clean, but if we look in the 4-hourly, I want you to focus your attention on this purple. Let's make it this color right here. No, actually, let's do this color right there. Yeah, okay, so this greenish level, perfect validation all the way on the 6th of May. You can see it was a resistance level and it was a support, and we have not retraced to that in a while. I think that combined with the daily 21 SMA, otherwise known as that middle Bollinger Band, if you can catch a level of support at $6.97 or $7 flat, or, you know, depending on how late in the week it is, right? The 18th, the 17th, 7/17, right? Next week, the rest of the month, you know, $8. So the fact of the matter is, if we hold this ascending trend line, you know, I mean, this is a very steep ascending trend line, right? We would have to, we have held this for, you know, a couple weeks now. And the fact of the matter is, we're showing some healthy consolidation. The fact of the matter is, if high growth does well in JP and the inflation, if inflation doesn't crash the markets in the next few months, fact of the matter is, I think we're extremely likely to hold this, and not necessarily hold this, but I think we're extremely likely to see $10 and $11 and $12, right? Yeah, I mean, I to be honest with you, I think we're going to see all-time highs in the next few months if inflation has already peaked. Also, and if JP and them and the Fed doesn't screw everybody over short term with the accommodative policy change, right? Yeah, I'm not saying whether that's good or bad, but short term for the markets, if they were to stop that, that's definitely not going to be good for the markets. So what we've determined is we're basically in firm uptrend territory. There's no doubt in my mind, right? And if we look at the daily SAR and Supertrend, right, you're in bullish territory. If you look at the 4-hourly, however, you've started to get the flips, right? 4-hourly SAR, otherwise known as that stop and reverse indicator, you got that flip to bearish. The Supertrend, however, you're still in bullish territory, so you like to see that, right? This is, you know, on the uptrend a while ago here, all the way over here. Okay, you had not. This is why you have to be careful, and this is why you have to, you know your way around these indicators sometimes, and use them more. You know, you can't just slap them on and think, oh, we're in bearish territory now that we got a flip. In multiple indicators, multiple false signals, you have to really. Anyways, my point is, the super trend was green throughout the entire uptrend from January or December 23rd, and yeah, from December 23rd all the way until February 22nd, which was a sell signal, and it predicted that perfectly. Now, the SAR, you may see, that flipped red 1,000 times. But right now, if we look at the price action right now, you are extremely close to getting that bearish flip on the super trend, right? I mean, if you're going to get that bearish flip, obviously, that's not a great sign, right? You've been, obviously, with the price action in this run-up, you've got super close, right? Right here. Right there, right here, you actually went below it for a second, but you got supported so many times were you extremely close to flipping that 4-hourly super trend to bearish, but you didn't. You held it and you got a bounce off of it, and then you made a higher high. That is the key here, and if we can continue that to be, if that can continue to be green and we can actually hold 750, you know what that means, okay? That, I mean, we've had healthy consolidation, we've got the news, we've certainly got, well, We've kind of got the interest. We did have the interest for a little while, but, you know, we did get a lot here. Here's the good news, right? We got a ton of volume. A lot of people bought, a lot of people buying in and just holding their shares, right? We did get a little bit of selling, but that doesn't, okay, that's about almost, that's not enough to justify selling off completely, right? Which we didn't, but, you know, you get what I mean, right? A lot of buying pressure and a lot of people holding shares. And if we look at if we look at this right here, okay, now some of this green volume was sellers, no doubt, but most of the people are hodling their shares, and that's indicated to me by the huge green volume, right? Even though we have a ton more red volume days in the small red volume days, it doesn't negate the fact that like 4 of these days was, you know, 50 million, 100 million, 150 million volume, right? Right here you got 800 million, okay? 500 million, 500 million, 265 million. Okay, none of these days. I mean, okay, it doesn't compare. It doesn't compare. Looking at the RSI on the daily, I really like the setup here. I really do. I don't want to get everybody too bullish, but I really like the setup. We hit 71 on the RSI. We got rejected. We've cooled down, and we're now at 60. I mean, that's what you like to see. We're cooling down, and, you know, one could argue that we're kind of arguing that right now, right? If the markets do well, I am arguing that we are going to get a freaking push higher. We've had our consolidation. If we do well in the pre-market tomorrow and open up well, or not tomorrow, I keep saying tomorrow, Monday, I would expect that it's going to be a pretty damn good week unless the Fed or JP crashes the markets. Looking at the daily moving averages, the 100-day SMA, that's not looking the greatest, but that one's not that important, to be honest with you, okay, in my opinion, at least. The 200-day EMA, the 21 EMA a little bit, and the 55 and 15. Those are the important ones, and 21, of course. And we're above all of them, okay? That's as simple as it gets. We already have the golden crosses, right? The most important one, the 200-day exponential moving average crossing below that 15-day. Otherwise, that red one crossing below the orange one, right? This one right here, crossing below, or yeah, it already is, okay, with that orange one, right? Look at the gap here, okay? There's a huge gap, and also you're going to want to know this one right here, the 55 and the red one here. So the 55-day SMA with the 200-day EMA. You want the same thing, right? The 55 above the 200-day EMA. Those, I know it might seem like, wow, they're just lines, Brandon. What the hell does that mean, man? They are indicative of golden crossing, and basically when that happens, right when you get that cross, that's a buy signal. When you get that cross up to bearish, right, when the 200-day EMA crosses above, that's your sell signal, right? And also, if we look at the 4-hourly, you just got the golden crosses, okay? That's as simple as it gets. You just got the golden crosses. A couple days ago, you actually got the golden cross, the 55 over the 200-day EMA a couple days ago on the 8th. I don't even think we talked about that really. You got the golden cross. You are going to get supported by these 55-day moving average if the price were to dip, and if it does break 750, it is a little. I mean, that is bearish. There's no other way to call it, right? There's no other way to call it, but you are going to have some support, a lot of support coming in very soon. Stochastic indicator, right on the 4-hourly, you were in bearish territory, but you're very oversold, right? Last time we were this oversold in the 4-hourly stochastic indicator was when we were valued at $5 a share. So the fact of the matter is, the 4-hourly looks like it's setting up for a bullish reversal pretty soon. It looks very oversold, right? 8 and 13 on the K and D lines, right? Just think of this indicator, if you don't know what it is, as an RSI and MACD in one. That's what it is. I mean, when it goes lower, it's oversold. When it goes higher, it's overbought, right? If you look here, it times it almost perfectly very, very often, especially the weekly does. And if you look at the daily, or not the daily, the 2-hourly and the 1-hourly, you are getting the bullish reversals, right? The K line right there, 1783, the D line 1627, so that's a bullish crossover that you recently got. The 1-hourly, same thing, right? There are dissenting time frames, right? The 30-minute is nowhere near that. 30-minute, okay, the 30-minute is not doing that great. But if you look at the weekly, right, this is the most important one. Okay, screw the short term. What's the midterm looking like? Okay, what are we gonna hit this week? The weekly stochastic indicator says and indicates to us that we have literally, we're not even halfway to where we're going to go, right? The last time we got rejected, the last time we were overbought on the stochastic indicator was a long time ago. Okay, February 16th, February 12th. Okay, those 2 weeks, that's when we were overbought. We are not even in the middle yet. Okay, we're not even at neutral yet. We're not even at 50 or 45 or 55. We're not even close to that. We are still, the K line is at 40, the D line is at 26. So we still have, I mean, this just says it all, right? We're not in oversold or we're not in overbought territory whatsoever on the weekly stochastic indicator, nor are we overbought on the RSI on the weekly, right? We're only at 56. And if we look at the daily RSI and stochastic indicator, the daily relative strength index is going to be 60, right? We talked about that. And the daily stochastic indicator is very weird. The daily stochastic indicator has not been as good as the weekly whatsoever. I mean, it's a little bit late. Plus, yeah, it's just not been as good. Yeah, you're in bearish territory on the daily for some reason, but then again, your sell signal on the daily stochastic indicator was way off. It told you to sell at $6 when if you just waited 3 days, you could have sold at $9. So you just missed out on a 40-50% run up based on that indicator. That's why we look at multiple, right? That's the oddball out, right? That's the one indicator that's like, well, that doesn't really fit. That doesn't really make sense. Also, the SAR on the weekly, the stop and reverse indicator, we got rejected at 912 there perfectly. That's going to be an important level to watch. And guys, I'm going to be honest with you, I'm a little bit bored of the technical analysis because there's literally 1,000 indicators that we can go over. And although I like the setup, I really do believe, it's my belief right now with the market state that it's in, it's just the high growth and the broader markets that's going to determine Bionano stock price more than anything else. But to sum it up, of course, technical analysis matters a lot. It matters a lot still, even with the state of the market. That high growth is doing well, Bionano is doing well. High growth is not doing well, Bionano is not doing well. Although that is kind of, that's always going to be true, but I feel like it's been more true since February 16th, right? But I do want to say that I do like the setup here a lot, right? And if we look at the weekly, you did have a little bit of an inverse hammer here. You got to call it how it is, but we still are in, I would say we're still in bullish territory, right? You had a hammer candlestick here, right? That's a bullish chart pattern. And then you had basically a 3Y soldiers, which is basically just sequentially the candlesticks getting larger, the open and close getting larger sequentially, and there's 3 candlesticks in total. And that's a bullish chart, that's a bullish candlestick pattern, right? And also, if you just look at the weekly, doesn't take a genius to figure out this looks like a big ass cup and handle. I mean, that's as simple as it gets. Okay, February 19th, that's the start. 1569 is the all-time high. You go down and then you start going up, right? The low was 430 on May 13th, the day of earnings when everybody was selling, but yet our community was buying the dip, right? Humble brag there, not very humble, but yeah. screw the Bears, screw Robbie, screw Dr. Smith, man, or Dr. Smith, Robbie Smith and Dr. Pepper, right? Anyways, this is kind of forming out the rest of that cup and handle, and obviously the price target of the cup and handle would be the sum of 1569 drew up all the way and measured to 430, placed at the spot of the breakout. So you're looking at like $25 to $30 a share based on the big ass cup and handle pattern if it were to come to fruition. And it's still extremely speculative, but I've been calling this speculative for a while, and it's time to face the facts for me and say that, hey, this pattern looks, as of now, it's still extremely speculative, okay? it's still extreme. There's no other ways. It's still extremely, by this chart pattern, we would be at 1569, and at $25 pretty much this year. We would hit $25 a share, we would hit $30 a share, or 25 at least this year, based on if this was true. So it's, come on. Okay, even if we're only going to hit like $20 a share or 22, that's still, that's insane. That's still insane, right? I think $20 a share is going to happen this year. But that's because of the fundamentals, not because of the chart patterns. But anyways, that's great to see. It's great to see, and it's time that I admit that this has looked very nice, and I think I already have. But yeah, I just want to make it clear that I've been calling this speculative for a while. It's still super speculative, but I hope it comes true, obviously. And right as of now, it's looked very beautiful, and it looks like it's doing what it should. As of now, and it has to do it. It doesn't have much room for error, right? It really, we can't. If this is going to be a true price chart pattern, we cannot see $5 again. We probably can't even see $6 again, most likely. I guess we technically could wick down real quick, right, if we follow the previous data point. But anyways, that's enough ranting for me. There's literally 1,000 indicators that we can look at. With that being said, I will show you my current positions, and then we will get out of here. So basically, I do love technical analysis, but here's the thing: high growth and the genomics sector has just dictated the stock price last few days, not days, last few months, to be honest with you. But technical analysis, I do like the setup to reiterate, right? To reiterate. And for my current position here, Bionano Genomics, that is 100% of the portfolio, and that's how you know I actually mean what I'm saying. And with that being said, thank you all so much. This is not financial advice. I will see you all in the next